are mortgage rates going to continue to rise?
That's a big no. They're not. I know
Mark that
I spent,
down.
yeah, yeah, hey, mark it down. Look, you're right because your reasoning's right, and obviously none of us can predict the future, but we go back to, our favorite guy, Dr. Lawrence Yun, the chief economist at NAR, but I had a chance to sit in on one of his presentations just the other day. And what I found fascinating with one of his slides was, you know, let's just say, you get mortgage rates and 10-year treasuries, they tend to track, in lockstep. And what he basically shared with us is that historically, the premium between the 10-year rate and the 30-year mortgage rate is, if I remember, is somewhere around 1.5, 1.75%, right? So if the T-bill, if the 10-year treasury note was trading at 3, your mortgage rate might be 4.5, 4.75. And what happened?
Can I just ask you something real quick? Did they teach
Yeah.
this at Florida State?
Oh yeah, yeah. Come on, the Harvard of the Panhandle. This is entry level stuff. I mean, come on, this is freshman year.
Sorry,
that,
keep going.
yeah, that gap got historically wider this year. In other words, the 30-year went up faster than the underlying T-bill. So we no longer were trading at a 1.5, 1.75 point spread. It was like 2.5, almost 3. And so if we just went back to our historical margin, you'd be looking at about a rate that's like 5.75, 5.5 today. And so, what that tells us, what that tells Dr. Lawrence Yun, who ended up telling me in a very simple format, is that the bankers were ahead of this inflation. They understood that the Fed was going to get a little bit more aggressive. They understood that faster than some of the underlying credit things that we're talking about, the bonds and the 10-year, et cetera. So, if we can get inflation just to at least get some signs that it's going to level off, right? We got a long way to go to get it to the Fed's 2 to 3%. I mean, we're way above that. So there's some hurt, I think, that still has to come about. But if we can get it to the point that we're starting to flatten out, and what I learned this past week is that could be a catalyst for getting us back to that normal spacing of 1.5, 1.75. So, the easy answer is, rates are, there's true fundamentals to believe that they're not going to continue to escalate. And it was just neat seeing that from like a scientific standpoint. I'm a gut guy, and Dr. Lawrence Yun, not, he's a smart man, and he was able to kind of show that. So it was interesting.